Hello, everyone. My name is Tom Laviano. I am a portfolio manager here at United Asset Strategies, and I also help the team with technical analysis. Working out of my home office today, we wanted to just kind of help give you an understanding a little bit about how we use technical analysis here at United. And there's lots of different ways we use it. We use it for support and resistance levels. We use it to identify relative strength in sectors that may have the wind at their back. We use it for trading. So there's a lot of different ways that we use it. So today I wanted to give you an example of a way we've used it to help our trade in GLD, which is the Spiders Gold Trust. And how we've used it to um, trade around our kind of longer term view over the last few years. So this is a busy chart you're looking at here. This is the chart of GLD, and bear with me, and I'll try to make it understandable. But the blue, green, and red lines here are price action. I've got moving averages on here. I've got these are price Bollinger Bands, which are 1 and 2 standard deviations from the 200 period moving average. I've got trend lines. I've got support and resistance levels. A lot of different stuff on here. But we're going to try to, just keep this simple. Um, so the basic idea here is I wanted you to see that this is a downtrend. This goes back to 2011. Gold peaked here in 2011 and traded lower over multiple years through 2017. And we watched this because we wanted to get more constructive on gold, and we would if this downtrend was broken. And that's exactly what happened in 2017. If I go to a daily chart here and I kind of zoom in, here's where it finally broke. This is that downtrend line. We got a break here. Now we didn't rush in right on this break because we had some short-term resistance levels. I drew a little resistance level here. So we wanted to wait for that break as well. So we got the break of the downtrend, and then here we got the break of the short-term resistance level. And this is when we became more constructive on gold. We raised our weight for growth and income portfolios from a 2% position to a 5% position, which is kind of large for us for a regular size position. And it's because we got more constructive on gold at this time. Over the next few months, gold kind of traded sideways, and we took small profits twice. Um, we, we took a small profit here after sideways consolidation, got overbought again, and we figured we'd wait for a better opportunity. And we stayed. When I say took profits, I mean we reduced the size of our position, but we were still constructive on gold, and we kept the 2% position the entire time. We did get a pullback, came all the way back to this downtrend line that we talked about breaking to the upside earlier. Um, and again, we waited for a short-term break of the short-term resistance and to show that this downtrend seemed to be over. And we re-entered and again took a small profit into resistance areas out of this kind of longer-term sideways consolidation. Here, just to give you again a little inside baseball here, we had what we call a divergence. So we exited here, but price kept going higher. So we exited a little early, but we saw a divergence where momentum was actually making lower highs. So we got a reversal, and in that reversal, we decided to re-enter our position. So we did get back up to a larger position here, and again, here we were a little early because gold continued to consolidate. We call this a falling wedge pattern. This is often a continuation pattern, which essentially means that you expect price to continue in the direction of the trend. And right now, we were starting what looked like a short-term uptrend, and turned into a longer term uptrend. So we got a falling wedge consolidation. Price broke out higher. And if we fast forward again, we got a nice move higher. Strong momentum here. And again, we had a divergence. This is a relative strength index. We had a lower high on the relative strength index, and we had a higher high in price. So we had a divergence here again. We had a nice little profit here. We decided to again reduce the weight to a 2% position and take some profits. And again, just expecting consolidation or a pullback at this point. And we got the same kind of consolidation here. We got another falling wedge pattern. We decided to re-enter our position back to a 4% position here. And now we're starting to see higher lows, higher highs, and higher lows. So now we have our 200 period moving average trending higher now. So this is becoming a more constructive trend. We re-entered after consolidation just prior to the break of the falling wedge pattern. And if you fast forward a little further, we held that into February, early March, when the pandemic started to take over fears in the market and equity started to sell off. We had another divergence here between the relative strength index and price, higher price, higher high, lower high. We decided to go with cash here over the 2%, over the additional 2% in gold. So we held our 2%. We decided to reduce the weight, and sure enough, as the selling became more indiscriminate and even gold started to sell off, and we were bullish gold, we had a pullback 7 days later, and we were able to re-enter back to our full 4% position, an overweighted position, around the same price that we got back in December. So we took that opportunity to raise the weight again, and that's where we stand today. So here's today. Price bounced strongly after the indiscriminate selling stopped, and we had a nice move here. So this is some of the ways that we use technical analysis. It's looking at indicators, looking at chart patterns, divergences, moving averages, a lot of different things that we look at. And from the start of this bull move in October of 2018, our core 2% GLD position actually returned about 43% for us. And the additional 2 to 3% that we were trading with returned an additional 52% for us over that time. And that's as of today, where we still hold the full 4% position. I hope that gives you a little bit of insight as to some of the ways that we use technical analysis. I hope it was helpful. And if you have any questions, feel free to reach out to your relationship managers, and the analysts are always available as needed as well. So that's it from me. Have a great day.